Well, let's get the latest in business and finance now with Ricardo, who's got some good news for borrowers, but not so good news for savers, Ricardo.
That's right, Janice. It looks like anyone with high interest saving accounts wanting to see interest rates rise will have to wait a little longer because today's consumer price report from the Bureau of Statistics came in softer than expected. The headline rate of inflation, which is measured by looking at the prices of a basket of goods and services like food, health and housing, rose by a less than expected 0.6% in the March quarter, taking the annual rate to just under 3%. The biggest increases came from cigarettes, which rose as the federal excise tax increase came into effect. Petrol prices surged over the quarter and secondary education climbed by about 6% as the new school year started. Cheaper furniture and cars offset those gains. Now, the underlying rate of inflation, which strips out volatile items from a survey-to-survey basis, is still where the RBA wants it to be.
Well, it's pretty clear that inflation is well and truly in check, and the Reserve Bank can comfortably stay on the interest rate sidelines. The Reserve Bank will continue to talk about the inflation stability story that they've highlighted over the last few months. I think the key now is the labour market. If you see the labour market continue to show good signs of improving, there'll be a lot more, murmurings from the Reserve Bank about the potential for rate hikes towards the end of the year. We're expecting that first rate hike in the December quarter.
Now, that next unemployment report is due in about 2 weeks. Meantime, around a quarter of New South Wales households will face a 17.6% increase in gas prices from July the 1st. That's around $224 per year on the average bill. It's being recommended by the Independent Pricing and Regulatory Tribunal and applies to those on regulated tariffs. Now, Australia's growing export market has been largely blamed because wholesale prices on the eastern states are linked to the Asian market through new LNG export plants in Queensland, and the gas retailers add the carbon tax has also contributed. Let's take a look now at the Australian share market, which had a stellar day, with Your Lords closing above 5,500 points for the first time since June 2008 as China's manufacturing sector improved slightly. Every sector finished higher. Resource stocks and banks did well. JB Hi-Fi, though, fell. Its CEO, Terry Smart, is retiring after 14 years at the company. Tokyo's Nikkei rose despite warnings of higher inflation there from the Bank of Japan. Shares on Wall Street were firmer, with Manchester United shares closing at an 11-month high following the sacking of coach David Moyes. The Australian dollar fell by 1 US cent immediately after the CPI figures and is weaker across the other major global currencies. And on the commodity markets, you will see that both gold and oil, there they are, weaker.